Hey everyone, welcome back to Corporate Decoder, the place where we unpack the boring bits of business so you don't have to. Today we are diving into Lord Abbett Private Credit Fund's latest report, and let me tell you, it's got some juicy details about their lending activities. So what's the big news? Well, on August 22nd of 2025, Lord Abbett Private Credit Fund announced they sold off a chunk of their shares, around 6,200,000 shares to be exact, for about $15.2 million. The price tag per share was $25.17. This whole deal's. If trace tag per share was $25.17, this whole deal was done through subscription agreements with their shareholders, and they're saying it's all legit because they're following a specific rule in the Securities Act called Section 4A2, which basically means they didn't have to register these sales with the big boys. They also made sure everyone buying was an accredited investor, meaning they have a certain amount of money and income, so they're considered feste-onfers, and they're saying it's all legit because they're following a specific rule in the Securities Act called Section 4A2, which basically means they didn't have to register these sales with the big boys. They also made sure everyone buying was an accredited investor, meaning they have a certain amount of money and income, so they're considered savvy enough to invest in these kinds of deals. Now let's talk about where the fund's money is actually going. As of the end of July 2025, this fund had loaned money to 31 different companies and had one investment in a joint venture. The total amount they've committed to lend is a staggering $1,064 million, or about $1.06 billion. And right now, they've actually loaned out $830 million of that. What's interesting is that 95% of these loans are what they call first lien debt. Think of that as the top dog loan, the one that gets paid back first if something goes wrong. The remaining 5% is that joint venture investment, also every single one of their debt investments to the tune of all $10.6 billion. And right, $830 million of that. What's interesting is that 95% of these loans are at floating rates, so if interest rates go up, the income from these loans for Lord Abbett Private Credit Fund goes up too. Let's dive into some of the numbers that describe the companies they're lending to. The median company they've lent to had $74 million in earnings before interest, taxes, depreciation, and amortization over a year. That's a measure of profitability. Their average borrower interest expense a company has, they're generating $2.1 in earnings to cover it. That's their interest coverage ratio. Traminin tweet $1 in earnings to cover it. That's their interest coverage ratio. And what are they getting paid for all this lending? The weighted average yield on their debt investments is 9.9%. That's a pretty solid return, especially in today's market. Keep in mind, this is the yield at cost, meaning what they paid for the loan, not necessarily what they're actually earning after all expenses. They also provided a table showing their investment activity for the month of July 2025. During that month, they made new loan commitments totaling about $20.8 million. Again, all of these were private senior secured loans, and one of them was an investment in a joint venture. Looking at the specific companies they invested in during July, they put $1 million into Ambient Enterprises Holdco LLC with a par amount of $0.7 million. Then there's United Flow Technologies, Intermediate Holdco Tyler Traver Private Credit LLC, which they invested $9.8 million in. This joint venture is actually with Stifel Bank and Trust, and it holds a bunch of it and welcomes $7 million, and their joint venture investment called SBLI Private Credit LLC, which they invested $9.8 million in. This joint venture is actually with Stifel Bank and Trust, and it holds a bunch of loans for other borrowers. Now for some good news for the shareholders. On August 25th, they announced a distribution, which is basically a dividend payment of $0.23 per share. This will be paid out on September 26th to anyone who owns shares by August 31st. And speaking of shareholders, the total net asset value, or MEV, of the fund as of the end of July 2025 was about $85.7 million. This means if you were to sell all the assets the fund holds and pay off all its debts, this is roughly what would be left for the shareholders. The NAV per share at that time was exactly $25.17, the same price they sold new shares at. Now, a quick disclaimer here, all these numbers, the sales, the investments, the net asset value, they're all based on initial calculations. The fund mentions these final results might change a bit after they finish their accounting procedures before they release their next quarterly report. So keep that in mind, things can always shift a little. And the report is signed off by Salvatore Donner, the Chief Financial Officer, on August 27th, 2025. So what's my take on all of this? Lord Abbett Private Credit Fund seems to be operating right in the sweet spot of private credit lending. They are focused on senior secured loans, meaning they're prioritizing safety in their investments. The The fact that all their debt is floating rate is a smart move in a potentially rising interest rate environment, as it should boost their income. The portfolio companies seem to be reasonably leveraged and have enough earnings to cover their interest payments. The 9.9% yield is attractive. The recent share sale suggests there's demand from investors and the fund is growing. They also declared a distribution to shareholders, which is always a positive sign for investors. The main risk I see is the general economic environment. If there's a significant economic downturn, even secure loans can face issues, and defaults could rise. Also, while 4.9x leverage and 2.1x interest coverage are typical, they aren't exactly the most conservative numbers you'll ever see. A severe hit to a portfolio company's earnings could strain their ability to repay. The joint venture with Stifel Bank and Trust also adds a layer of complexity and shared risk. However, overall, the fund appears to be strategically positioned. They're generating good returns with generally sound underwriting practices, at least based on the information provided. They're clearly a growing player in the private credit market. What's your take on Lord Abbett's strategy and their latest moves? Do you think their focus on floating rate senior secured loans is a winning formula? Right now, let me know your thoughts in the comments below. If you found this breakdown useful, give us a thumbs up and subscribe for more. Also, don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next one called